Look at the amount of time it takes to process these invoices and create pay apps. You might need to reassess your current tech stack. How does your internal team deal with that software? Are they good at it? Are they efficient in using it? Do they really know what they're doing or just using a workaround that somebody taught them when they first got hired?
Welcome to Builders, Budgets, and Beers. I'm Reece Barnes, and I started this podcast to have real conversations about money in the building industry, the wins, the mistakes, and everything in between. I believe builders deserve to feel confident about their finances, and that starts by hearing from others who've been through it too. This industry can be slow to change, but the right stories and the right tools can make profitability feel possible. Let's get into it. Mics are hot. Andrea, we're rolling. Thank you so much for jumping on the podcast today. How are you?
I'm doing well. How about yourself?
I'm doing well. It's actually kind of a rainy day here in Boston. A lot of rain, actually, the rainiest day that I've seen since I've got here.
I think that's a hurricane or something out there.
There could be. They do get hurricane aftermath. Is that the word?
Mm-hmm.
But speaking of math, you're an accountant, and that's what we're going to be talking about today.
Yes.
I love it. Okay, so if you could, just for the listeners, give them a little background on yourself, what role you have over at Melton & Melton, who you work with, and we'll just start from there.
Right. My name is Andrea Gallion. I am the Director of Client Accounting Services for Melton & Melton. Our firm is known in the Houston area for their work in the construction space. They've been around for 63 or 64 years now. I'm within a year. I'm okay.
I don't think anyone will get in the way of that. 63, 64, a long time. Yeah.
Right. A very long time. We have a lot of respect within the community, especially within the local construction organizations and with clients. In our department, we do a little bit of other things outside of construction.
Okay.
Definitely construction is one of our big spaces to play in.
Mm-hmm.
That's it. We have a team of about 9.
Okay. Yeah. Perfect. So when you're talking about like client services,
Mm-hmm.
like what does that actually mean when you're talking about working with a lot of contractors, strong reputation? Like what is a day-to-day service that you guys provide for builders and construction companies?
So for some of our clients, we help them with their number one, their processes, where we can either put together a standard operating procedure when it comes to their accounting, or we can take that on and help them get a product at the end that they can then in turn use for a draw. So that could be their invoice processing, where then someone from their team would come in and literally press a button and produce the draw schedule that they can submit for payment from their customer or from a lender.
Okay. That sounds pretty nice.
Yeah, it is nice.
Yeah. Okay. Okay, cool. So you're so a lot of standard operating procedures. Are you guys like actually performing the work, more of like bookkeeper, controller, CFO level services?
Yes. Yes, a lot of them we are performing the work for them.
Okay. Okay, cool. So you guys are like in the weeds. You're in the books with builders.
Sometimes, yes. Especially when we implement adaptive, we have to kind of get in the weeds to make sure everything is set up properly. But like I said, some of our clients have some people in-house. That standard operating procedure will design it for them and lay it out, and then come back and do true controller/CFO services. But the in-house is doing the day-to-day.
Got it.
Then we have some that don't have an in-house person, so we kind of function as the in-house, which would be the same kind of thing as far as AP management. The biggest issue there is that you have to make sure that you're coding things directly to a project.
You know what job those costs go to?
Good job. Yep.
Yeah, I mean that's the blocking and tackling that you guys are doing exceptionally well. Question that I have. Okay, so some engagements you're working on, they you're doing like full service, call it, like you're doing, like you're performing the bookkeeping, the controller, the CFO level work. Some of them, they have an in-house or an on-site bookkeeper performing the day-to-day, and then you guys are doing more of the controller, CFO level work. How, I guess, over your experience, how do you explain like what option is better for a builder? Like how do they really start to decide if they should do like full outsourced bookkeeping, if they should have someone internally, and then they should outsource the controller work? What are some of those situations that you would be like, yes, this would be a great fit, or this is something you should consider if you're this person?
So it all depends on how strong your in-house staff is.
Okay.
I've had a couple of clients to where their financial person that was in-house was retiring.
Mhm.
From a cost perspective, it worked for them to outsource 100% of the accounting and
Mhm.
not have anyone in-house. I've got others who do okay with the bookkeeping, so they just need those procedures designed for them and a
Mhm.
workflow. Like, okay, this is how you handle this invoice from the moment it hits your inbox till it's actually paid.
Mhm.
Um, it kind of depends. If your books haven't been reconciled in 5 years, you probably need to outsource that.
That seems just bizarre to me. Books not being reconciled for 5 years, half a decade. How does it even happen?
They don't have anyone in house that has accounting or bookkeeping knowledge. I don't understand why anybody would do a tax return off of that, but that's another conversation. But yeah, that it exists. I actually had this conversation yesterday.
What was the conversation?
Small construction company. They were looking for a compilation. So because they had a potential buyer,
Mhm.
but their books hadn't been reconciled in 5 years.
Okay. Okay, go ahead. Sorry. I don't mean to cut you off. Was there more?
So just that alone tells me that there was no job costing. There were no projects set up. There was just nothing. It was just because they were on desktop. So there was nothing there. And I'm like, to do that, to reconcile, I would need a very large retainer up front
Did
because
they
there's so
pay?
many other rabbit holes that I could go down with that because
s-
we're missing processes.
Okay, so processes. Okay, and then okay. You mentioned like it all depends on like how strong the individual is or the accounting team is that's performing this work. Now you're talking about like this example where like they being the business was in a position to get bought or acquired, and now it's kind of like this oh shit moment. I need to get like a compilation put together. I need to, like, someone's doing due diligence on my business. I need to show them that it is a healthy business, that it's a business worth buying. And now we get this like, what am I gonna do moment, because they haven't been reconciling their books. Let's take a step back, because I think that there's probably a lot of builders out there that are in that situation. When you say books haven't been reconciled in 5 years, let's just even take a step back. Like, what does reconciling books mean?
So reconciling books, meaning just for bank accounts or credit cards, just
Okay.
means whatever cleared the bank, meaning cleared actually the bank released funds to another third party, or charged to a credit card. It means that you're taking a statement every period, which is typically a month, and you're checking off, yes, I meant to pay that. It cleared the bank. It adjusts your bank balance. So if you haven't done this, and say your bank balance is showing that you have $100,000, but you didn't reconcile to make sure that whatever you paid actually cleared the bank, but your bank balance is showing you have $5,000. Where's the difference? Where's the money? Because you don't have, in most cases, transactions that are in the register or slash on the books to show where the money went.
Okay. So when you're reconciling, you should effectively be seeing $100,000 that has cleared the bank in the situation that you used. Or am I
Correct.
missing something? Yes.
Nope. Yep. But
Okay.
You don't see it because your bank on your books is showing you have $100,000, but what's over here in the bank says it's only five. So
So
your
that's
books need to match what's in the bank.
okay. And so that's where it's like when you have these builders that are just like, well, I just operate off the bank account, or like whatever's in the bank account is what we have. That's where it can get problematic with
Mhm.
all the nuances of construction accounting and why it's important to have somebody in the seat to know that we're using QuickBooks, our general ledger
Mhm.
software, to track and account for all of the dollars and cents that are coming in and out. So then that ultimately lines up with your bank account. It's like QuickBooks is telling a story. Like the bank account is reality. The books are telling a story. Is that a fair way to look at it?
It's the best way to look at it.
Okay. So then when you're not reconciling your books, or this individual hadn't reconciled books in 5 years, there was basically like 5 years effectively of that business that didn't exist.
Basically.
Okay. And so then that's where it's like, okay, now that seems like a pretty big deal. And obviously, like I literally just did a podcast that should be releasing here soon, with a couple of individuals, about like some more CFO work as well as more tax strategy work. And they had brought up like this acquisition concept as well of like poising the business to be ready for acquisition. Um, I mean, this is when you're not taking these steps and then you finally get into a position to someone want to acquire you. Why is it such a challenge for builders to just do this regularly? I mean, this kind of seems like a no-brainer. Not that you start a business to sell it or that's like your immediate intention, but that's kind of like it's a very logical avenue to take as a business owner is to build something to then sell it at some point, right? Whether it's to a like a child or a business partner or
Right.
someone else. How
Right.
isn't this like job costing and tracking and reconciling just second nature? Why is it such a challenge? Why does it get neglected?
Because most business people aren't good financial people. You have to have someone to sit in the background and manage what you're doing or manage the numbers to match what you're doing. Just like you said, accounting for your business should tell the story. It should tell when you had actual jobs going on versus when you didn't have any jobs going on, but you still carry the overhead. You have to make the two match. If you don't, it's hard to get someone to really understand the value of purchasing your business unless they're purchasing it for a license or relationships. But ideally, you want to show, yes, I've made money here. This is a profitable business in order for that person to truly see the dollar value.
Totally. Okay, so now when like you're talking about like in-house and outsourced, and honestly, do you know how hard it is to like say in-house and then not outhouse? It's so hard. It's so hard. But in-house and outsourced, like the difference is like the strength of an in-house team. When you're
Mhm.
looking at clients and like again, all of this context in the background, like really you need to have someone in the background that is a going to take things seriously enough to track and categorize things appropriately, knowing that the intention is to paint an accurate picture that reconciles out to the reality of the dollars and cents that have moved through this business. But when you're like talking to a prospect, right, like a builder comes to you and they're like, hey, like I think we need some services here. I don't quite know what it is. Like we evaluate my business and like put together a scope of work. What does a strong in-house team look like for you? What are just some of the checks and balances? Because if we do have some like accounting, bookkeeping, office management people listening, they can kind of like run like a little self audit of like what they're doing well and like maybe what they could pick up the slack on.
So, to me, a strong in house team would be individuals or one individual that's able to document the day to day events that occur, especially when they pertain to the finances. Meaning, um, someone writes a check. Well, did you record the check in the accounting software? Did you tie it to a job? Should have been tied to a job? What was it for? That's strong day to day, in my opinion.
Okay.
Because if you have enough experience and the right tools, it's easy for the controller or the CFO to come back and clean everything up and pull it together in a nice, pretty financial package. That day-to-day person has to record all the financial transactions. Did you keep the receipt? Do you have the receipt? Is it noted as to what it was for? Is this just meals and entertainment? Or did you take a customer to lunch? All of those different items need to be handled every day, not every week, every day. It's that important because it builds up fast and quick.
Okay, so you're pro daily. You're not pro weekly with like
No,
tracking receipts. And that's because it builds
no.
up quick. But what are some of the downfalls of that? Because I talk to a lot of builders, a lot of office managers, a lot of bookkeepers, and they're like, yeah, like I stay on top of weeks receipts like once a week, or like, yeah, I'm trying to get my guys to like come in and drop off, their receipts in the shoebox or the filing method, whatever it is, right? So that then I can like stay on top of it and categorize it. And like as like an individual who's talking, I'm like, okay, I mean that sounds reasonable. From a professional standpoint, why doesn't that weekly concept work? Why does it have to be daily?
We're all humans, and a lot of us tend to forget. For instance, you went to, let's say, Home Depot and you needed fasteners and some other small ins and outs. Are you going to remember a week, 2 weeks from now, exactly how much should have been allocated to each project? No.
Yeah.
In real time, when you're purchasing, you probably had a list.
Yeah. And
It's a
that
PO.
goes.
I'm sorry.
No. Go ahead. I think there might be a little bit of a lag. Continue. Go ahead.
Whether that was a PO that you called ahead and ordered, or you just went to the store free and just purchased everything. You had a purpose when you went to the store. Document it. Same day. Because it's so stressful for that in-house person who's responsible for gathering those receipts to get you to remember what it is you bought it for and where it should go, how it should be allocated. Okay, sorry.
No, that's perfect. No, and I think that's like, I think like this, just the simple truth of it is like the gap, the weak link is just human reality of you're going to forget things. And that's where we like, I don't remember the exact client prospect, whoever it was that I was talking to, but they had made a comment that they were like 3 months behind on receipts.
Mhm.
And that's kind of that's what I'm alluding to, is like being the gap, the short, or the weak link in the chain. Is it's not that like you're like, yes, of course 3 months behind is brutal, but the gap is that the reality is if we're not being consistent on a daily basis of getting this information in, you open up more and more and more room for opportunity and error for that situation to get to a 3-month delay. And then at
Correct.
that point, like, what do you do? Honestly, Andrea, like 3 months of like backlogged receipts. How do you even get through that accurately? Or do you just cut your losses and move on? Like, what do you do?
Um, I tend to make the superintendents and project managers mad at me because I'll go and export, for instance, the credit card transactions by credit card. Hey, I need you to code this for me. Hey, I need you to code this for me. Oh, all this stuff missed the draw. Yeah, they don't, they tend to understand it's important that you submit this in real time, really quick, especially when I'm sending you 3, 4, in some cases, I've sent 6 months of transactions for them to code.
Okay. Time out. Hey, that's great. Like, accountability is like the answer to nearly everything. But for those of you that are just listening, I'm rubbing my head because I'm sitting here, even just from like a business efficiency standpoint. You talk a lot about processes.
Mm-hmm.
Like, okay, we've got one individual in the back office that's tracking all the costs daily, right?
Mm-hmm.
That's the design. That's what it's supposed to be doing. It
Correct.
is probably the wrong word. They are supposed to be doing, right? But they can't do what they need to if they don't have a team of people that are in the field, project managers, supers, business owners, other individuals feeding them that information.
Correct.
Now, if we get into a position to where we're not staying on top of this daily, and we have project managers, which I'm sure there's only a few of them out there, that aren't getting receipts turned in, now we're, from a process and efficiency standpoint, it's not just the cost of the individual that is by design supposed to be taking care of this, but now we're incurring the cost of project management labor times X individuals times the hours that it takes for them to go through months of transactions, and they're not managing projects, and they're dilly-dallying around with a statement and an Excel sheet that there's going to spend half an hour to 45 minutes complaining about, being frustrated that they even have to dig through before they ever even start looking at it. It's like you're paying for all of that.
Right.
Sorry, that was just a tangent I had to make, because like it's just like it's one of those things where it's like, it's, of course, by design, it's supposed to be daily. But the challenge is, and I'm sure like the project manager would be like, you got to empathize with me. Like I got 1,000 things going on and I'm running to Home Depot, and then I got to run over here to this job. And then I have my little folder and I collect my receipts, my envelope, and it's all in, the whatever in my dash. But it's also like the importance of this could be compounding, not just from the daily, weekly, monthly standpoint, and then potential of getting behind. But the bigger picture, to tie this back, is it could prevent you as the business owner from being able to sell an asset that you've spent years, decades building.
Yeah. So it gets even better.
Go ahead.
1, 2, 3 months of the receipts that you get from anywhere, they're made with those thermal printers. What do you think happens to that receipt when it sits in the heat?
Yeah, geez. Nothing. Done. Blank receipt.
Completely blank. Yep.
So then it's like truly almost impossible. Unless you call Home Depot. You can call Home Depot, right? And get receipts.
If you didn't put it with an account, no, you can't. If someone just happens to make a stop at Home Depot,
yeah,
and it's not tied to an account, PO, or any of that, no. How are you going to get the receipt? There's no. It's blank.
Yeah.
There's no identifying markers on it.
Yeah. Okay. So that's just like makes it like almost completely impossible, which actually brings up, you get when you talk to builders, you talk to a lot of people, and I love them, the fine contractors of America, as I call them. And what happens to the individuals that are saying that, like, well, we don't even track receipts anymore. We just categorize the transaction. Because you can categorize transactions. But your eyes are wandering. What's going on? What's your take on that?
Are we certain what it was for? And
what if they come back and be like, yeah, my guys they go through a statement and they say, yeah, it was for this job, this job, this job, this job, this job, and we do it once a month.
So what if your customer asks for the receipt?
We're a fixed price builder, and we don't give them any proof of cost.
How do you know that your employee isn't stealing?
Guy's been with me for 15 years. No way John, the project manager, would steal from me. What is this IRS concept? Like what if you get audited? Like what's the reality of that happening, and then like you actually needing to have proof of all this stuff?
I don't know what the percentage is now, but I would think that because there are fewer auditors because they've been downsized, that the chances of an audit are going to be lessened. Yeah. Mm-hmm. But if you are audited, you're going to be required to produce receipts. You might get lucky and get an auditor that is willing to accept a credit card statement or a bank statement. Mm-hmm. But what happens when you pay in cash? Yeah. There are a lot of contractors that walk around with cash and they pay for cash. Mm-hmm. Whatever they might need for cash.
Totally.
And that receipt is now blank.
Yeah. Brutal.
How do you track that?
It's a risk. It's all about like mitigating risk, right?
Exactly.
We're mitigating risk. We're talking about like the IRS. Like, I think you bring up a good point. I think a lot of like builders, they are, not to say that they're like out of malice, not tracking documentation, just being like, yeah, if the auditor wants to come, like I'll give them a box and tell them to go for it. Right. But
I've seen some that will.
Yeah. Oh, totally. I've heard of them. The guys will literally be like, yeah, we keep everything in paper. I've got just like file cabinets full of documents. If they ever want to come and like audit me, I just give them the keys and tell them good luck, go for it. Right. And it's like, okay, that's great. But it's all about mitigating risk. Okay. The audit IRS side might not be that big of a deal. But I think like more personally, to make this more personal, is like the daily tracking of these costs, if done with a system and a process, is going to insulate you so much better than anything that you could like put off or like slack off on. And the outcome could be selling a business. It could just be understanding the profitability of the business. You mentioned
Mhm.
like taxes, right? Like someone who hasn't reconciled books in 5 years, they're running taxes on that business. It's like, I don't know why you would. Actually, what was your comment towards that? You made that comment earlier.
So if your cash is off, that tells me that you're missing transactions, whether it's a deposit, which would typically be considered income,
Mm-hmm.
or an expense. So you're not doing yourself a favor by not reconciling. You're actually hurting yourself.
Mm-hmm.
You're just hurting yourself. Or you could have things that are sitting in the register for expenses that you paid, but they never clear. And that's one that I find all the time. They call in accounting, we call them stale checks or stale payments, like they were never cashed.
Mm-hmm.
So your expenses essentially for a period are overstated because you never actually paid it because the money never left your bank.
Interesting. Okay, keep going.
It also, skews the bank balance by letting it
Mm-hmm.
sit there a long time. I've seen some that have gone back 10 years. I'm like, yeah, you wrote a check, but you never actually remitted the money to anybody. Some states like Texas, there is a, what is it, unclaimed property site that
Okay.
you can go and remit the funds there when you have checks where people didn't cash them. You would then void it and then issue it to the state and disclose who it's for. But a lot of people don't do that. It's
Okay,
just
but
your big picture is skewed.
is there a benefit to that? Like if someone doesn't cash a check, like that doesn't really benefit the business. It like almost makes it no.
It doesn't
Okay.
benefit the business.
So, and the reason why this is resonating with me so well, because this is an angle that I haven't frankly considered when it comes to like ACH payments. I think like these builders that are like running with like, oh, I'm a check guy. I'm a check guy. I'm a check guy. I cut checks. I want to sign all the checks. I want to know. But then it's like, well, that's just opening you up to someone not cashing the check. Granted, like a lot of these people that are running checks is typically because they've got like, I don't know if this is politically correct, but it's just like more of like a hand to mouth subcontractor, like a small business, or like they need the funds, right? And like they want the check so they can go cash it immediately. So that might not be all the challenge, but I'm also seeing just that concept that you're sharing of funds, like check has been wrote, given to somebody that never actually got cashed
Mhm.
as like a huge reason why to just even go back into ACH payments. Like the transaction is documented, the funds are released. It's impossible for them not to go into the account. Impossible. I mean, I don't know why they wouldn't.
Right.
But point being is like everything's cleared. Now you have healthier books. You know that money that was supposed to go to them is getting there, and you're not having to go through this like big remittance process once
Right.
it's uncovered with stale
I just
checks.
had another thought. So the other side of that is, your bank register in your
My
accounting
light turned
firm,
off.
in
Go
your
ahead.
accounting software is showing that you have X amount of dollars, right?
Mm-hmm.
Well, my bank balance is significantly more. I can't tell you how many times I've seen builders get into financial trouble because they watch the bank balance versus what's in their checkbook. So they overspend.
Say that again. Their
So
bank balance. Go ahead.
talking about those stale checks, right?
Mm-hmm.
And they've been written and they're just hanging out in the checkbook.
Mm-hmm.
So my checkbook balance might be, let's say, back to that 5,000, but my
Mm-hmm.
bank balance is showing that I have $60,000. I've seen builders make decisions based on what's in that bank balance versus what's in their accounting software balance. They didn't take into account that money is already allocated. So they
Yes.
tend to overspend or take
And
out one too many draws for themselves.
got
So
it. And then what does that typically result in for the builders that are operating that way? Is it floating cash? Is it like basically effectively working for free? Like what?
I don't think it's floating cash. I just think it puts them in a bad financial position because now money that you allocated for someone is no longer available for you to do what you need to do with it. You can't pay that contractor that comes up, hey, I never got the check. The mail never showed up.
Mm-hmm.
or it's bad business. That's why you need to reconcile.
Totally. Okay. No, this is great. And so it's like basically like honestly, like as a builder, correct me if I'm wrong, but like
Mhm.
almost like advice that I want you to clear to a builder would be don't even look at your bank account, just look at your accounting software. Like that needs to be your source of truth.
I would say look at your accounting software if you're taking the basic steps to make sure that your money is accounted for, which includes reconciling. That's
Okay.
basic.
Okay. Can someone who's running like cash-based accounting operate that way, or is it still important for them to be running QuickBooks?
I always recommend running QuickBooks because more it's easier to point out where you actually spent money
Okay.
when you use a basic software. And QuickBooks now can range from super basic up to more sophisticated. But it's easier to track those totals if you have it in accounting software. A lot of people like paper and pen. I don't,
Mm-hmm.
um, because you could also forget to log something. I've seen that happen.
Totally. Okay. So whether you're cash-based or accrual-based, you got to be on QuickBooks. Doesn't
Mhm.
matter. That's like
Yes,
just like a ridiculous comment. It's like I'm cash-based accounting. It's money in, money out. It's like, well, you still need to be tracking it.
exactly.
Cool. Okay. So this was actually great. I'm curious though, like, okay, so aside from like what the strong back office looks like, what does that actually mean internally? What has to take place for that to be deemed as strong? Is like effectively to boil it down, is you need to be tracking costs daily, not weekly, because it's going to pile up on you.
Right.
And you have to be reconciling books monthly. Is that fair? Like a monthly reconciliation closeout? That's
I
WIP.
might even look at it. If it's construction, I would definitely say yes, because that way you can catch the items that haven't been job costed.
Mm-hmm.
And because I don't know, I know for me, I see a lot of construction companies too that have horrible WIP schedules, or they really don't have a WIP schedule because nothing was ever allocated to a project.
Mm-hmm.
If you're reconciling every month, you can add that as an extra step to make sure that the expenses incurred that was job costed are allocated to a project at the same time.
I think it's going to be worth digging into WIP here.
Okay.
And I say that because, well, we just released like a really snappy WIP reporting tool.
You did.
Thank you. Um, but I also don't know if like WIP is like totally understood or leveraged as often enough as it should be. Can you just give me like your general high level on WIP? Your stance on WIP? Go ahead.
WIP basically tells you where your project is as far as if it's how close it is to being complete is probably the
Mm-hmm.
easiest way to say it. And it's based on the expenses that you've estimated versus the expenses that you have actually incurred. It then does a little calculation and gives you a percentage.
Okay.
And if you allocate the expenses in real time, it'll show you how close you are to completing that estimated budget that you had at the beginning. It's probably the easiest way I can put that.
Okay. So if you're keeping track of your costs in real time,
Mhm.
then that's going to tell you how close you are to completing the estimated budget.
Yes.
Why is that important?
And I'm always going to go back to a tax perspective.
Okay.
It'll tell you how much of the revenue you're required to acknowledge in that year, or if you can defer some of it to the following year. It You'd like the two of those to tie together. Um, it also lets you know from a cash perspective how much more you need to complete the project.
That's a big one.
Yeah.
Okay, so primarily is like it's a tax advantage because like if you know your costs in real time, that's going to be telling you how close you are to completing the estimated budget.
Mm-hmm.
You need revenue or income to cover those costs.
Correct.
So you should be billing respectfully of your cost incurred
Mm-hmm.
to prevent overbilling, having too
Mm-hmm.
much money,
Mm-hmm.
which you would then get taxed on? Or is that when like percent complete comes in?
That's where percent complete comes in.
Okay.
So say you have completed the project, you've billed, let's say 90% of the project, but you still got
Billed
this,
receivables. Okay.
yeah, receivables. But you've still got an additional, your retainage to come in. Well, you can't defer the income to the next calendar year or tax year because you've completed the project. So they kind of have to line up. So you're going to be taxed on the full amount of the project versus deferring to the following year. So it's important.
Totally.
And when completing the tax return, that is a big picture for any CPA.
That makes sense. Because then because like again, if you have like a tax, someone who's doing your taxes, is the right term tax provider?
Yeah.
Preparer, a tax
Mm-hmm.
preparer, somebody
Mm-hmm.
preparing your taxes. Like their best interest is to make sure that you're paying the taxes that you have to pay and nothing more, nothing less. Is that fair?
Yes.
Finding areas and ways for you maybe to not have to pay taxes. Is that fair?
Yes, absolutely. Yes.
So then that's like, even again, that goes back to this like the daily compounding into the necessity of making sure that you're not overpaying on taxes. If you know your costs in real time, that's going to tell you how far along you are in your estimated budget. That's going to point towards, are you properly billed? And when you are in a tax situation, getting ready to pay taxes, you don't want to be paying on more income than you actually need. And that's going to be reflected based on the costs that you've incurred. Fair?
Mm-hmm. Absolutely.
Okay. Okay. And that's where like I think this is helpful because the perspective is important. Now, what are the struggles with WIP? Because again, is this a monthly thing, quarterly thing,
I see some that are annual.
annual? It could be and you're laughing. Is that a bad thing? Or is annual WIP a bad thing?
Think about it. If somebody is, especially someone making over $100 million, think about
Okay.
how many transactions it requires for them to incur cost, right?
Mm-hmm.
How many transactions is that? And you
Hundreds
didn't
of
job
thousands.
cost them in real time.
Yeah.
So yeah, your WIP schedule, you don't have a WIP schedule, essentially.
It's just like hold your breath and see what happened at the end of the year type of thing. What do you advise? Do you advise monthly WIP? What do you advise?
Absolutely. Because you're more inclined to remember what that cost was for and what project. So someone in-house is where it's crucial to have a good, strong person in-house that as the data entry or however it's entered is occurring in real time, they can make sure that those job costs are allocated to a project. It is very hard, especially for someone whose gross revenue is over $100 million,
Mm-hmm.
for them to say defer it to their CPA for them to figure out the WIP schedule. Your CPA wasn't there every day. They have no idea what project went on, what the project entailed, the moving parts to the projects.
Mm-hmm.
No idea. Do you know how many months it takes to figure that out?
Probably until the next year.
It takes, yeah, a lot of times if that's not the only thing that they're doing, probably 2 months, if that's the only thing that they're doing. But
Okay, so that
most
would be
CPAs have how many clients, right?
Yeah, there we go. Okay.
Yep.
Okay, and that's where like I think this is like even like helpful for me because I'm like kind of this dynamic of like, well, you get your WIP, and I know like putting WIP together is kind of a pain, and like I know there's like surfacing uncategorized transactions or whatever, but this is really like kind of like the final stamp to a call it like a premium reconciliation. It's like
Mhm.
kind of like the last we're good to go. You can reconcile your accounts, you can reconcile QuickBooks, and if you just run WIP on top of it, that's like the final you're good.
Yep. Standard operating procedures.
We're outlining SOPs here for
Yep.
the listeners of Builders Budgets and Beers. Which we don't have beers,
No, we
Andrea.
don't.
We don't have beers. But we've checked 2 of the 3 off. But I think no, I think this is good. Now, why don't people do this monthly? Again, like the daily transactions thing is just a pain to put together the WIP report. Like, why don't they do it monthly? Or do people do it monthly? I don't know.
Some do, some don't. Some don't think about it. Um, if your in-house person is at best a AP clerk, they might not know. They
Totally.
might not have that oversight to give them process improvements. They might be the office manager that's doing bookkeeping as a function of her office manager position, but has zero accounting knowledge,
Mm-hmm.
especially construction accounting knowledge.
Mm-hmm.
So it depends. It depends on, what business, how much experience that person has in that position, and how involved your CPA is
Mm-hmm.
or your auditor. Like a lot of people have to have reviews for bonding purposes.
Mm-hmm.
If you don't have someone to give you that advice in your day-to-day processes to help for that final product, they wouldn't know.
Totally. I'm even go ahead. Do you have more? Okay. I'm just thinking like, and of course I'm biased, but with adaptive, like the ability, there's such a stronger opportunity for builders to stay on top of costs in real time, like
Mhm.
daily, right? And then you've got the WIP reporting function in adaptive. That's just like
Mhm.
going to be like live fed WIP.
Mhm.
Is there really like an excuse or a reason not to be following these practices with an adaptive? Because that's kind of how I've always looked at software. Is like, sure, it can be like exciting. You can get excited about the features and functionality, and it does this really cool thing and that really cool thing, and like adaptive's AI, or like I can template X, Y, and Z in this feature. But really what it is giving you a framework to establish a process around.
Exactly.
Do you think that like for anyone who's struggling with this or that is on adaptive, there really shouldn't be a reason why they're not running extremely tight reconciliation processes and they're not running monthly WIP?
There is no reason not to. There's
There's no
absolutely
good excuse.
none, none, none at all. Because adaptive also gives clients the ability to where you don't have to be that one person in that seat. Okay, yes, I can understand like the receipts not getting coded in real time.
Mm-hmm.
Well, if you're anyone with the credit card should be able to code their stuff because all they have to do is snap a picture.
Mm-hmm.
If they snap the picture, sometimes it'll try to auto code it, but
Mm-hmm.
nonetheless, it's sitting right there waiting for someone to look at, and they have a picture. It's
Right.
probably better than you get without adaptive or some other means that can do that.
Right.
No, there is no good excuse.
And that's where I've always like, I think like adaptive has some really like strong components. And this is me being modest, trying not to be
Mhm.
super biased. But I think like adaptive has some really like compelling functionality. But I've always seen the value of adaptive not as much being like just an AP or an expense tool, but really more of a holistic tool. What's your take?
Yes. I definitely see it as a holistic tool. Um, what it takes for me to blow through everything in the adaptive inbox, and that would be any type of receipt, pay apps from other subs, etc., is mind blowing. Like today, I think it took me 15 minutes, and part of that, and I had a full inbox.
What's a full inbox? Let's like how many bills was it?
So that was probably 30 transactions that
Okay,
I
so
did.
30.
It was like 30 transactions that I coded, sent for approval in under 15 minutes. The
I'm not a
hardest
math
part,
guy. Go ahead.
uh-huh.
Go ahead. I was gonna make
The
a
hardest
stupid
part,
comment.
I had a new vendor, so I had to set the vendor up. That
Mhm.
was my smart out. So that went from taking a piece of paper and manually keying in everything line by line and pressing send for approval. I didn't have to go and scan the document to get it in. I didn't have to do any of that, those extra steps. I didn't have to stamp it and give it to a project manager and say, hey, can you sign off on this? I didn't have to do any of that. I just processed what was in my inbox, and it was over 30 transactions in under 15 minutes.
Sounds a lot like 30 seconds per transaction.
That's
Again,
right.
I mean, I don't know. I think this was great because like you being the director over there of client services at Melton, like you see this all the time.
Mm-hmm.
I really appreciate your perspective on here. I thought it was very tactical and helpful for the listeners, which is what I always gun for. And you've got the credibility. You talk to a lot of builders, you've seen it all, you know construction accounting inside and out. If there was any advice that you would give builders out here, and remember, I think, just based on our user base, we're talking to builders anywhere from like, call it 2 million to 100 million.
Mm-hmm.
Most of them are falling in that like 10 to 30 range, I'd say 8 to 30 million range. What advice would you give them before we call it?
Look at the amount of time it takes to process these invoices and create pay apps. You might need to reassess your current tech stack.
Mm-hmm.
I know there are other more sophisticated software out there, but how does your internal team deal with that software? Are they good? Are they good at it? Are they efficient in using it? Do they really know what they're doing or just using a workaround that somebody taught them when they first got hired?
Mm-hmm.
All of those things are worth looking at when you want to save on time and cost. Because the faster they can get through their AP to produce a product for AR, you should see your money just as fast. So start by looking at your tech stack.
Start looking at your tech stack. I have a tear in my eye. That was great. Andrea, this was an absolute pleasure. We talked about, and it all like kind of compounded on top of each other, right?
Mm-hmm.
Like it really boils down to like track your costs on a daily basis. And if you're not, or you don't have someone that can do that, you should call Andrea.
Yeah, I'm here.
But it all boils down to knowing your costs in real time, and that's what we're about. So everybody, thanks for tuning in. Andrea, thank you so much for jumping on. I hope this was helpful. I'm looking forward to catching up with you here soon.
All right, thanks.
All right, you bet.